Welcome back to today's morning report analysis of videos on Wednesday 16th of November with me, Richard Pro Market Analyst at Hantec Markets. Looking at Eurodollar now, and the euro is on the brink. 2 days, well basically now into a third day of really putting pressure on this 107.09 support. It has breached it intraday. That's the January low from this year, 107.09. A breach or a closing breach of 107 figure, I would say, probably would be the confirmation, and that would reopen this massive low from December at 105.38. So we're just hanging on to this support now. We've had a couple of days in a row of really testing it. Third day today, minor breach 106.97, but again back above the level. You had what I sort of mentioned in the morning report today as an inverted hammer, which can be considered to be a positive signal if it's followed by a strong positive candle. It could be a reversal, but again, today's candle is certainly not strong yet. Lots of uncertainty as to whether this is a recovery or not, or whether it's just a stalling within the downtrend or within the sell-off. Now, momentum indicators stretched on the RSI 28. It's the level it basically got to in October, before we saw quite a considerable rally, actually considerable rally of sort of 850 up towards 1150, so 300 ticks pretty much of rally. So there is still precedent for quite a significant recovery. I'm still of the expectation that I think it's going to rebound, likely to be into a sell zone, and that sell zone would be 108.50 to 109.50 for me, for my money, and I think that would be where you start to see the next rolling over, but for now it's just hanging on by a thread, really, because this is as I said, key support, but the RSI is also stretched, and you could argue that it's during this November sell-off last year you got these sort of near-term little technical rallies when the RSI got to stretch levels, but then it sold off again. And I mean, for example, this one 673 up to 828, so 150 ticks of rally, and again that would be back into the realms of sort of 108.50 to 109 area if that were to be seen as in a sort of a mini sort of knee-jerk unwind before further selling pressure. I think that could be what we're seeing at the moment with this little consolidation. If there is a little recovery, I think it would be sold into, but certainly at the moment we're just hanging on by a thread. 3 days in a row now we've been testing this level. It is holding. You could argue that the momentum indicators on the hourly are not as sort of bearish as they were. Certainly the RSI now sort of beginning to pick up from the mid-30s. MACD line's more positive, but the stochastics have turned over again. That's not all that great. You got today's rally high of 107.59, which 107.60 really, and yesterday's rally high of 108.16. That 108.16 level is pretty much the key resistance now near term. If you sort of saw a move above that, then yeah, you could see 109 figure area, but yeah, I think for now I'm still looking for just a little bit of a knee-jerk technical rally, but to be honest, I think that would be sold into. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.